Okay, so for the next part of this module, so this is about the goals of the firm. Okay, so a firm, okay, before we discuss the goals of the firm, let us first define the term firm. Okay, so this term is referred to as a unit of business control. So this is also defined as the unit controlling productive operations by hiring services of the factors of production and selling those commodities, okay, as well as the services either to other firm, the household, or to the central authorities. Okay, basically, a firm refers to a business unit, okay, that controls, or it has a control in terms of production of goods or services. So here, in the process of producing those goods or services, they are the ones who are using the different factors of production. So they are the capital, the assets that is being utilized for the production, the raw materials or the inputs, the labor, technology, okay, and other factors that is being directly used, okay, in the process of producing those goods or services that is to be offered to the customers or intended users. Okay, so investment or capital is also a part of the factors of production. Okay, so here we mean firm as something or that is related to a business firm, okay, that creates this products or services. So here, a business enterprise, okay, as this is what we are talking about earlier. Okay, a business enterprise is a combination of people, physical and financial assets, as well as information. So this is the factors of production that is being used, okay, in the process of producing the goods and services. So here, the people who are directly involved with a business enterprise, so they are the stakeholders, which includes the customers, stockholders, management, laborers or employees, and the suppliers. So these are the stakeholders which has direct influence over the operations of a certain firm or business enterprise. So the business community, of course, we all know that our resources are scarce or limited. So this is also their source of input. Okay, so these are limited as well. So they also pay taxes, they provide employment, and they produce the society's material and service output. Okay, so basically here you can say that a business enterprise or a firm plays an important role in the economic activity of a country, a society, or a particular group, okay, of people. So in this illustration, we have here of how business firm is functioning or operating and playing their important role in the production of goods or services. So if you could notice here, we have the input. So these are the factors of production, the resources, okay, so people, facilities, equipment, materials, methods of work, and others. So this will be used, okay, by the business firm. They are the one who is processing this input, okay, and turn them into output such as goods and services. Okay, so this is what we are talking about earlier about how a business enterprise operate. Okay, so the next is the objectives of the business firm. Okay, so we have here the following objectives. So we will discuss each of them as we go along. Okay, so here, the first objective is profit maximization. So of course, we all know that the basic and the main or the principal reason why we do business is to earn profit. Okay, so aside from earning profit, it is also their best interest to maximize the earnings of these profits. So here, in the traditional economic theory, so of course, the typical firm before was very small. So the owner managed and compete with large number of similar firms. Okay, so that's why if there is competition, profit maximization will be an objective. However, for some, it may be difficult, okay, for them to achieve this objective because of the competition that exists. Okay, and especially if they are behind, okay, of their competitors. Okay, so under these circumstances, profit is the rational objective. Okay, especially also for them to remain in the business in the long run, so they have to earn profit. Okay, so because here the income will of course be enjoyed by the owner if they will earn it, or they can also give, or a portion of it may be returned in to be used as an investment or additional investment for the operations of their business. So the maximization of profit is then ensured the self-interest of the owner, okay, so as mentioned also, who both decides the actions of the firm and ensure that these are all carried out. Okay, so again, if you are the business owner, this will be, of course, the first objective that you want to achieve. Okay, so in relation also to profit maximization, okay, so in accounting, we all know that profit is the difference between the revenues and costs. So once these are identified, okay, so we will assume of profit maximization. So how do we maximize the profit? So there are two ways. You can either increase your revenues by producing more and selling more number of units, or minimizing your cost by using low cost input, or having a more efficient or productive process to shorten the period of producing the goods or service. Okay, and it will also equate into lesser labor cost or production cost. So this, either of these two can maximize profit. Okay, so the next is in most recent years, so the true objectives of the firm is the same, still the same. This is still related to profit. So often the objective is tied, of course, as mentioned earlier, to survival or remaining in the business for the long run. Okay, so security also and maintenance of assets. Okay, so this will help the business firm to stay financially healthy. Okay, so each of this objective is complementary to profit. Okay, in that the maximization of profit may ensure the attainment of those objectives. Okay, survival, security, or maintenance of assets. Okay, so the second objective of the firm is wealth maximization. Okay, so what do we mean by wealth maximization? So this means maximizing the net present value or wealth of a course of a financial action. So here, the present value of a course of action is the difference between the present value of the benefits and the present value of the cost. Okay, so this concept of present value we will have a separate module for this one. Okay, so but for the purpose of discussing this as an objective of the business, so we will have a sort of an overview of this topic. Okay, so basically, here, to simplify this term, when you say wealth maximization, okay, this has something to do with the different financial decisions that is being made by the business. Okay, for example, if they want to purchase a fixed asset, okay, so of course this will entail a large amount of capital in the present, and before making such decision if they will buy or not, okay, so they have to make sure that there should be a benefit that will flow back to the enterprise in the future, okay, to recover the present expenses, okay, that they incurred in purchasing such asset. Okay, so in order to determine if this will be an acceptable option to purchase, okay, so we will have to determine the present value of the cost, okay, of this asset, and the present value of the benefits that will flow to the entity in the future. Okay, so the difference should be benefit, okay, in order for the management to accept such a decision. Okay, so aside from this, we also mean wealth maximization in terms of the shareholders. Okay, so for example, if you are an investor, so you invested this much, okay, let us say 1 million, okay, and that is the value of your investment. Okay, so in terms of wealth maximization, after a year or 2 or more years, okay, your investment should grow from the first time that you have placed the investment. Okay, so it should increase in value. So how to increase your investment? So this is, of course, the result of the business operations of the enterprise. So how they earn profit, okay, and as well as having assets and other things that are related to a positive outcome or benefit that flows to the entity, which results to the increase in the value of your investment as well at the same time. Okay, so that's how wealth maximization is. So this will depend on the performance of the business enterprise, okay, in terms of profit, expansion, okay, and the like. Okay, so a financial action which has a positive net present value will create wealth. Okay, so this is desirable as mentioned, while the negative present value should be rejected. Okay, so maximization of wealth is possible by making decisions of the firm to get a benefit. Okay, so here the benefit should exceed the costs, so that the project or the proposal or the decision will be accepted. Okay, so as the owner of the company or its shareholders, so of course their primary objective is related to financial objective. Okay, so finance is usually stated to be maximizing shareholders' wealth. So here, applying the finance principles, okay, it can aid or help the management in maximizing the wealth of the shareholders. So here, since the shareholders receive their wealth, okay, so how do they receive the increase in their wealth or investments? So this is through dividends or capital gains. Okay, so the increase in their investment. So shareholders' wealth will also be maximized by, okay, maximizing those dividend or capital gains that they receive. Okay, so the third objective is value maximization. So here, the prime goal of the company is to maximize the market value of their equity shares. Okay, so if the shares of a certain company is high, so it can indicate that their performance in terms of operations and profits is also better. Okay, so that's why in order for you to join them, you have to pay or to invest more because you will get more as well. But that is not a guarantee. Okay, it's just an indication how well they are operating. So here it takes into account present and prospective future earnings per share. So, however, as mentioned, there are risks, okay, that is associated with doing business. Okay, so the dividend and retention policies as well will limit us or the shareholders, okay, from um, getting something or maximizing their investment and so on. Okay, but here we say value maximization. We are talking about the perspective of the business firm, while wealth maximization is that of the shareholders' perspective. Okay, so for value maximization, okay, so the wealth created by the firm, okay, so as mentioned, will be reflected in the market value. So if how well the business is earning, so it is reflected in the amount of their shares that is being offered to the public. So therefore, the financial decisions will cause to create wealth, and it will also be indicated or reflected in the market price. Okay, so hence the prime objective of the financial management here is to maximize the value of the firm so that all others will also be maximized. Okay, so the profit, of course, first will be maximized as well as the wealth will be maximized, okay, along with value maximization. Okay, so aside from the three objectives that we have discussed so far, so there are other maximization objectives, okay, that the firm has. Okay, so these are, okay, first, sales maximization. Okay, so of course we all know that in order for us to maximize the profit, we should also maximize the sales. Okay, so here the interests of the company are best served, of course, by maximizing their sales revenue, which will bring benefit of profit, growth, expansion, market share, or the value of their market share will be maximized as well, and their financial health, okay, will be stable. So the size of the firm, the and aspirations are more closely identified with the sales revenue than with profits. So, however, it follows that if the company is able to maximize their sales, so profit will also be maximized at the same time. Okay, so the next is growth maximization. So here, the management will seek objectives which will give them satisfaction, such as salary, prestige, status, and job security. So, on the other hand, on the perspective of the owners of the firm or the shareholders for a corporation, so they are concerned with market values such as profit, sales, and market share. So, here, the management or the manager should do their job well so that not only their own interest will be achieved, but also they have to seek and achieve first, okay, the organizational objectives for them to also receive, okay, what they are expecting from their employers or the business entity. Okay, so but here when we say growth maximization, we are talking about the firm as growing in terms of profit, sales, and market share, or they expand more in terms of the variety or different variety of products that they are offering, expanding to another region, okay, adding more customers. So that is what we mean by growth maximization. So these differing sets of objectives between the managers and the owners is reconciled by concentrating on the growth size of the firm. So here it will bring higher salaries and status for the business or for the manager, and larger profit at the same time, and market share for the owners. So this is a win-win situation between the managers and the owners, okay, if they will focus on the objectives of growth maximization. Okay, the next is maximization of return on investment. Okay, so here, this is a strategic aim of the business, okay, enterprise. This is the return or to earn, or this is the earning, which is return on investing their capital. Okay, so here the rate of return on investment is determined by, so this is how you compute return on investment. So we will divide the net profit or income by the capital used or invested, okay, to achieve that profit. So this is this ratio will give us the idea of how well the management used the invested capital in producing or earning the profit. Okay, so the higher the rate, the better. Okay, so meaning to say the management are efficient and effective in utilizing the capital for creating or earning profit. Okay, so the next is social objective. So here, the business enterprise is an integral part of the country. Okay, so they are part of the society. So as such, in return for the privileges and rights granted by the government or the country, so the business firm should be made increasingly responsible also for social objectives or social responsibility. So that is why we have the social corporate social responsibility. This is now a requirement for every organization to have such, or to have this program where they should allocate part of their income, okay, to return this to the community, okay, in whatever form it may be. Okay, so this is how social objective works. So it should be also in line with the objectives of the entity. However, in some cases, other entities might think of social objective as something that is not really not aligned with their objectives, because here they should allocate a portion of their profit to be given the community. Okay, so which they think that this amount should be given to the owners or bring it back to the organization to be used as additional capital. Okay, so however, in today's setting, in the field of business, they are required now to have this corporate social responsibility as part of their objectives. Okay, so those are for the goals and objectives of the firm for this video lecture.